Today, I'll share with you one ETF that can either become your best ally or your worst enemy. And so you'll find the pros and the cons of the Invesco QQQ Trust Series 1 ETF with the ticker QQQ. So first, let's see what this ETF is all about, and after we'll see what are the pros and the cons of it. QQQ is a fund managed by Invesco, which is an American independent management firm which is located in Atlanta. And this ETF has the objective to track the famous NASDaq 100 index, which is an index that excludes financial companies and that is based on the market capitalization of those businesses. And so this index, as well as this ETF, will be targeting the large cap technology companies. But more precisely, this ETF will give some great exposure to companies at the forefront of the revolution of the technology in different fields, for example, the augmented reality, cloud computing, big data, and mobile payments. It is why among the 101 holdings of this ETF, you can find great companies such as Apple, Microsoft, Tesla, Amazon, and Nvidia among its biggest holdings. And so, with no surprise, the technology sector will come at the first place with over 50% of the total assets of this fund. And after, you can find the consumer discretionary, the healthcare, and the industrial sectors. In total, only on its side, this fund has over $200 billion of assets under its management. And as being a passively managed ETF, meaning that the fund manager of this ETF won't have to be actively managing it, which means that on your side, you'll have to pay some smaller fees compared to some actively managed ETF, as you can see with its fees of about 0.20% per year or $20 per $10,000 invest in that fund. But what is incredible about this ETF is its incredible past performance over the last couple of years. For example, if you would have invested $10,000 in that fund 10 years ago, this would now be worth over $60,000 at the moment, which is representing over 18% of average annual return per year. But on its side, despite having a lot more potential of return compared to the average of its industry, Morningstar is also giving a lot more risk that will come with this ETF. Nevertheless, over 1,100 large cap growth ETFs, this fund still has a 5-star rating by Morningstar, and add to this, QQQ is still considered as the best performer in terms of the large cap growth ETFs over the last 15 years by the Lipper firms. And based on the average daily volume trade, this ETF would currently be the second most traded ETF in the US. Plus, to distribute the dividends that they receive every single month from the different companies that they hold, QQQ is giving some great quarterly dividend distributions to their different shareholders, which represent a current distribution rate of about 0.50% per year. So now has come the time to share with you the pros and the cons of this ETF. First, let's start with the good news. As a passively managed ETF, as I told you earlier, you'll pay some lower fees compared to some actively managed ETFs, and this can represent an excellent way for you to increase your total return over a long period of time. Indeed, to reduce your total expense ratio is the only way that you can guarantee yourself an increase in your total return, especially knowing that expenses can add up very quickly over time. Plus, by having an historic that dates from 1999 and by being one of the most traded ETFs on the market, it obviously means that this fund has a lot of liquidity. This means that all the frequent traders that will want to buy or sell this fund will be quite happy about it. Plus, if you're feeling bullish about the market at the moment and that you're looking for great bullish ETF, well, QQQ can be one of your best options. In fact, one of the biggest pros of this kind of ETF is that in bull market, QQQ will tend to outperform S&P 500 ETFs. And so it means that this fund has way more potential of growth on the long term compared to some other funds of its same category. Plus, QQQ Holdings includes many great variety of technology companies going from cloud computing companies to different electric vehicles companies, which obviously mean that they are more diversified into the growth technology sector. So on your side, it means that it might be a better option for you to invest directly in QQQ compared to invest directly into different individual technology stocks. But now that you've found what are the big pros of this fund, let's see what are the big cons of it. Well, obviously, since this fund is tracking the NASDAQ 100, meaning that it only focuses on 100 companies, well, it obviously includes great technology companies such as Salesforce, which are obviously included in different other exchanges, as well as small cap companies that will tend to outperform large cap companies on the long term. Plus, by mainly investing into technology companies, this ETF obviously has more volatility that will comes with it, which means that it will have obviously more sectoral risk. And this also means that despite being able to outperform the S&P 500 in times of bull market, it also underperformed the market when it comes to bear market. Add to this, since the different QQQ holdings tends to outperform the market in bull market and to grow faster than they normally should, it obviously means that for the classical value investors, the measures of these kind of companies will technically be always overvalued, as we can see by its current price to earnings ratio of about 28 at the moment. So as you can see, QQQ can be a very interesting investment vehicles for long-term investors that are looking for great capital appreciation over time. And personally, since I believe that passively managed ETFs are the best for most investors, I think that this one can be a great addition for your portfolio, especially if you want to have some great exposure to the NASDAQ index. If you have, for example, currently one Dow Jones and one S&P 500 index ETF. But on your side, if you are more a dividend income investors and that you're looking for the best dividend ETFs to buy right now in 2023, well, check out the video that's gonna be right over here, and I will see you soon. Peace.